Hi everyone. So welcome to the live stream today. It's always a pleasure coming your way as we continue with our discussion towards the ICA November 2021 examination, and with our polls and our recommendations or your recommendation. We have seen that you guys mentioned that, hey, you would want videos, and also you will want to practice questions on key subjects and key topics. And one of the key areas that you guys highlighted for us to look at in much detail was the issue in relation to the accounting standards. And so that is what we're going to be producing in a few weeks as we continue with the discussion and provide you with the contents that you require in order for you to prepare well for your examination. So starting with that thing, we are looking at one of the critical accounting standards that you need to know about, and that is IFRS 16 leases. And I've covered extensively all there is that you need to know about IFRS 16 leases. You can check the description to this video as well and be able to join or watch the full content. But what I want to do today is to provide you with some understanding on the issue in in relation to how we can solve a practical question on the accounting standard. Now, solving a practical question on IFRS 16 is very critical. Today, we want to look at a question where we are going to be making payments half yearly, numbering the sum of year digits method to be able to arrive at the interest chargeable. And then number three, we'll be able to identify how we can extract the financial statement under the various circumstances under consideration. So if you joined the stream, you're welcome. Give us a thumbs up on the video, and also remember to share the video. Let us reach as many students as possible watching the video, and let's together assist a lot of students. And if you have any questions, most importantly, put it in the chat for me. I'm going to read all of your comments and provide you with the assistance that you need in order for you to prepare well for your examination, and most importantly, pass the exam. So let me go straight up into our question for the day as we begin the discussion. So you can see the question right up on your screen there, and you can take a screenshot of the question and look at it. In that case, it's an ICA past question that we want to go into on leases and how it is structured. So let's go into the question and let's see what we are supposed to do right here. Okay. Now, the requirements of the question is very critical. So we want to read the requirements of the question and find out exactly what we need to look out for here. Now, in the question, we are told that we should prepare the financial statement extracts. The financial statement extracts showing the lease transaction of ACCA Limited. Showing how the lease transaction of ACCA Limited should be treated for the year ended 31st December 2014. So it is very important for us to establish the requirements of the question, but most important, we need to also look at the issue in the financial statement itself for the year ended. So the year ended we are supposed to prepare the financial statement for is 31st December 2014. 31st December 2014. So how do we go through this question, and how do we actually present this question? So now that we know the year ended and the financial statements we are supposed to prepare, let's look at the requirements of let's look at the question in detail. You are employed as the financial accountant for ACCA Limited. So you have a good title there. You are the financial accountant there. ACCA Limited leased a new piece of equipment from Amacom Limited for 3 years. Very important. So the lease term is 3 years. So as we are reading, we could be putting some of these things down. Remember, like I tell you always, you don't do this one in the exam, or you just underline in the exam, or but I'll have the luxury to be able to do that. So for 3 years, commencing on 30th September 2014. So it's very important that the date of commencement is something we need to also pay attention to. That is 30th September 2014. Now, remember what is going on here. The company is leasing the asset from 30th September 2014, but then their year ended is what? 31st December 2014. That is the year ended the examiner said we should prepare the financial statement. So before I even get excited about it, you will know that from September we'll have October, we'll have November, and then we'll have December, which means that for the year ended that the examiner said we should prepare the financial statement, it is how many months? 3 months period to the year ended. Why must we be interested in this? It's because of the allocation of the finance cost or the interest expenses. And I'm going to get into that in the moment. So commencing on 30th September 2014, 30th September 2014, the fair value of the equipment is 70,000 Ghana cedis. It means that should ACCA Limited decide to buy the asset today, it is 70,000 Ghana cedis. But then look at what is going on here. A deposit of 4,000 was payable on 30th September 2014. So the day the entity entered into the contract, they made a deposit of 4,000 Ghana cedis, followed by 6 half-yearly payments. 6 half-yearly payments of 13,500 Ghana cedis payable in arrears commencing on 31st March 2015. It's very critical. You need to understand exactly what is going on here. So after the 30th September, when they did the deposit of 4,000, they will now pay every 6 months how much? An amount of 13,500 for every 6 months. And that will be half every year for the period of duration. ACCA Limited allocates finance charges on a sum of the period dates basis, on the sum of the period dates basis. So what does that mean then? It simply means that here you realize that we don't have any percentages here, so we have to use the sum of year dates to arrive at the finance cost chargeable. So let's do some workings here real quick and find out what exactly we need to look at. So workings, you ready about that? Let's look at it. So workings ones. The first workings we want to do is to determine the finance charges. The finance charges. Or the finance charge. Remember that the way the question is structured in such a way that the fair value of the equipment is 70,000. But if you look at it carefully, you realize that the company is paying more than the 70,000. So let's see how that is true. So the finance charge, pull up our currency sign here. We bring in the deposit that they made. And that was 4,000 Ghana cedis. Then the remaining payment that they are going to be making, that's the future lease payment. Remember, they said 6 times. So that is going to be 13,500 by 6. So we multiply that up, and that gives us 81,500. Okay? So you add that up. When you add that up, I think that should be just 81,000, not 81,500. 81,000. So when we add that up, it gives us 85,000 Ghana cedis. So meaning that for the property, the entity is paying 85,000 Ghana cedis. But what is the fair value on the assets? So this is the total lease payment. But what is the fair value on the assets? We are told in the question that the fair value of the assets, as per the question, it's 70,000 Ghana cedis. So we less that, the balancing figure becomes the finance cost or the finance charge, which is 15,000 cedis. So from this question, the way we are able to arrive at the finance cost or the finance charge for the period under consideration is 15,000 Ghana cedis. Now, it is this 15,000 Ghana cedis that we are going to be allocating using the sum of period digits. Now, the sum of period digits we say is that, so the sum of period is simply going to be n out n plus 1 over 2, where n simply means the number of lease payments, So if you check the question up, they are going to be making 6 half yearly, 6 times. So they are going to be making the payment for 6 times. So it means n in this case is 6. So we're going to have 6 out, 6 plus 1 over 2. So that the sum of the period, that is 7 by 6 over 2, that will be 52. So, no, 42 rather, not 52. 7 by 6, yeah. Okay, so 42, not 52. So we get 21. So the sum of the period they get is 21. Now, what does that mean? The way this works is that you are going to exchange it up, so that if you want to charge the finance cost, this is how it's going to be at the end of the day when you are going to be charging your finance cost. You're going to be having 6 over 21, 5 over 21, 4 over 21, 3 over 21, 2 over 21, 1 over 21 in that case. So that is the sum of year period. Now, so let's look at the finance cost allocation. How we allocate the finance cost. I see some of you joining. You are welcome. Give us a thumbs up on the video when you join. If you have any questions, put it in the chat. If you're on YouTube, put it in the comment section. If you're on Facebook, and then I will be replying to you as well on that. If you're listening to the audio of this on any of our audio platforms, you can leave us a message on the platform wherever you are at, if that is possible. So how do we allocate the finance charges for the period under consideration? So if you look at it, it's 21. And if you look at it carefully, the payments will be made as follows. 31st March 2015. Remember, that is the first payment in the question. We are told that is the first time they will make that 6-year payment. From 31st March 2015, we are going to be coming to the next period. That is going to be 30th September 2015. Okay, so March to September, then it goes to another March again. In that case, (2016) 31st March. Now I'm going to explain the mind behind what we are doing. Listen carefully. You see, the idea here is that we are preparing the financial statement for 31st December, and the company makes the payment in arrears. If you remember our amortization schedule, when payments are made in arrears, we have to do the workings for 2 periods or 2 years. So even though we are preparing the financial statement for the year ended 31st December 2014, we have to do the amortization schedule for the year ended 2014 and the year ended 2015, 2 years, so that we'll be able to split it, or we're able to be splitting the lease liability into current and what? Non-current liability. That is the idea. So because payments are made in arrears, that's why we have to do for 2 periods. So like you can see here, 31st March 2015, 30th September 2015, 31st March 2016, the following year or the following period under consideration. So look at how we're going to be doing the allocation. So for 31st March 2015, that is the 6th thing. So that is going to be 6 or 21 by 15,000. Now, please note that the way we come across this is very simple. The sum of year date I computed could also be done like this. Since they are making the payment in 6 periods, it is 31st March 2015, 30th September 2015, 31st March 2016, 30th September 2016, 31st March 2017, 30th September 2017. So this is the 6 payments. Okay. So we will number it 1, 2, 3, 4, 5, 6. This is the idea. So we could add this up. Now, if you add this up, it should give you 21. If you check 11 plus 4, 15, 21. If you add this up, it gives you 21. So that is another way we could have calculated the sum of year date. Then the way we do the allocation is that we take the reciprocal of it. So the first period becomes 6 over 21, second period 5 over 21, third period 4 over 21, fourth period 3 over 21, 2 over 21, and then 1 over 21. That is the idea. So this is how we will be able to get the fraction. Then these fraction will be used to multiply the finance charges or the finance cost we computed so that we get a respective finance cost for the period. The idea is that as the lease time comes to a closure, the finance cost we charge reduces. So this is another way the sum of year dates can be calculated if we're not using the formula, and it is the same thing in that case. It's the same thing in that case. So if you look at this, do the workings up, I'm getting 4286. 4286. Now you got to be careful here. This amount you see here, 4286, is for 31st March 2015. Now that is 6 months from the September. Are you getting the idea? But remember, we are preparing the financial statement for 31st December. So I told you that we'll be interested in how many months? 3 months. So if this whole amount is for 6 months, we will divide it by 2, and half of that would have to go to the financial statement for the year ended 31st December 2015. So for the year ended 31st December 2015, half of this amount will be going there. 4286 divided by 2, which is going to be 2143, will be going into the financial statement as at 31st December 2015. I hope you are getting the idea, because from 30th September 2014 to 31st December March 2015, it's 6 months. But we are preparing the financial statement up to December. So we have to take half of that, and that will be charged to the financial statement for the 31st December. That is why we do the break in that case. For 30th September, we're going to be having 5 over 21 by 15,000. And that is going to give me 3571. 3571. 3571. Now that is going to be coming for the entire period under consideration. So no problem. Then we go to 31st March 2016. That's going to be the third period, if you remember that very well. And so that is going to be 4 over 21, still by 15,000. And that is giving me an amount of 2857. But again, 31st March 2016, we have to prepare the financial statement up to 31st December 2015. So of this amount also, half would have to be allocated, will be charged to 31st December 2015. Okay? And the half of that figure there is actually going to be an amount of, so 2857 divided by 2. 1429. I hope you are getting the idea very well. So this is how we allocate the finance cost. This is how we allocate the finance cost. So we get 31st March, the first 6 months, split it into two. The second 6 months, no splitting. The third 6 months has to be splitted, all because of the year ended under consideration. All because of the year ended under consideration. So now that we have this, what do? We now put this in the amortization schedule and then prepare to calculate our costs in that case. We get our amortization schedule, then we prepare to calculate the costs in that case. If you have any questions, put it in the chat for me if there is anything you don't understand. So that is workings 3. Now workings 4, it's to prepare the amortization schedule. But then we need to look at the lease liability outstanding as at 30th September. So the lease liability at 30th September 2014 is going to be the fair value of the assets, which is the 70,000, minus the deposits that we made. If you remember in the question, we made a deposit of 4,000. So that right now at 30th September, the day we started the lease, we are owing the lessor 66,000 Ghana cedis. That is the liability outstanding that we need to pay the lessor 66,000 Ghana cedis. So it is this 66,000 Ghana cedis that we are going to be putting into our amortization schedule to do our workings. So we pull up the period, we bring in the balance brought forward. Because payment is made in arrears, we bring interest. Then we'll bring the lease payment. They'll bring the balance carry forward. So let's see if we can just bring some lines in here. Much better like this. So we slash in our currency signs. So stay with me carefully to see how we're going to put these pieces together. So in presenting this, what exactly do we do? The first period, remember 30th September. So we are preparing the financial statement to 31st December. So we bring that up. 31st December 2014. So at 31st December 2014, remember the lease liability at 1st September is 66,000. So the balance brought forward is going to be 66,000. Then what is going to be happening is that the interest, as at 30th December, how much interest is outstanding? Remember, I told you that the first interest we calculated is for a whole 6 months, but we split that into 2, and we are going to be charging part of that for 31st December. So that is going to be from our workings here, 2143. Remember, at 31st December, we are not going to be making any payments. So that is going to be dashed because we don't make payments on December. We make payments on every 6 months, March and September. Does it make sense? So if we add it up, the balance carry forward is 68,143. 68,143. So that is for the 31st December. Then from there, we come to the next period where we are making payments as an organization, and that is going to be 31st March 2015. So when it comes to 31st March 2015, we have 68,143. Remember, from 30th September to 31st March 2015, it is 6 months, and the 6 months interest was split into 2. Half of that was charged for December. The other half will have to come to the March period. So the other half is the 2143. But this time around, as at 31st March 2015, the entity will make a payment, and that payment is going to be the 13,500. I hope you're getting the picture here. Well, 13,500. So we added up arithmetically. That is going to give us 56,786. 56,786. Then we move on to the next period, and that is going to be 30th September of 2015. So 30th September 2015. The opening balance is 56,786. Remember, for 30th September 2016, we calculated the interest to be how much? This figure here. 30th September 2015. We calculated the interest to be this figure here, 3571. So we bring that up. Are we going to make any payment during that period? Yes, because the payments are made every 6 months. So we pay 13,500. Then we get a balance carry forward. That is the 46,857. 46,857. Now, so you realize that the financial statement is up to 31st December, right? So we are now in 30th September 2015, but we need 31st December 2015 so that we can now do the split. So at 31st December 2015, we're going to have 46,857. Are we going to be charging any interest for that year? Yes. If you remember, I told you that half of the interest belonging to 31st March 2016 will have to be charged for the year ended 30th December 2015, which is the 1429. Will we make any payment for the period? No, we will not make any payment. So that is going to be dash in that case. We do the arithmetic, and that gives us 48,286. So you realize that because payment is made in arrears, we have done the thing for 2 years. That is 2014 and then 2015. We did it for 2 years, 2014 and then 2015 in that case. So that is the idea about what you need to understand there. But why are we doing this? Because we want to split it between current liability and non-current. So the 2015 figure here, the 48,286, becomes the non-current liability, so that the balancing figure of that and then the amount at 31st December becomes what? The current liability. Sounds good? See how simple it is? Let me know if it makes sense for you in the comments. So current liability will now be equal to the 6814 or 68413 minus the 48286, and that gives us an amount of 19,857. So that is the current liability. So this is how we split the liability into current and non-current. This is how we split the liability into current and non-current. Why are we interested in this? Because of the financial statements that the examiner has asked us to prepare. So any questions, let me know in the chat box. Let me see. I see some statements. Let me try to see if I can bring them up real quick. Ibrahim said Sierra Leone. Okay, Ibrahim, welcome. Then we see Stephen said, hey, nice to meet you, lecturer, and thank you for helps you give us. God bless you. Amen. God bless you too, and thank you for your message. Vincent, Lord, for your presentation. Well understood. Okay. Okay, I think he typed that twice. Then Suleimana Mohammed Nasif said, with the help of your live sessions, I was able to pass financial reporting and MA last sitting. Wow, that is great to hear. Thank you very much, and may God richly bless you. Amen. And thank you also for staying with us. That is very great that you were able to pass your papers. That's very interesting to know about. Very, very good there. Congratulations. So now that we have our lease liability figured out, remember we need to deal with the asset itself and certainly calculate the depreciation on the assets. So we could do workings 5 and deal with the right of use of asset. In this question, we were not given the economic life of the asset, so we will just use the lease term to be 3 years to depreciate the fair value of the assets. So we have the fair value of the assets. Remember 70,000. Make sure you don't come and use the 66,000 here as the value of the assets. The 66,000 is the liability situation. Okay, so make sure you don't mess it up in that case. Then we will charge our depreciation. Remember, from the September to December, it's 3 months, 2015. So our depreciation is going to be 3 months. So 70,000 over 3 times 3 over 12. And that's going to be 5833. We take it out. And we get a carrying amount of the right of use of assets. And I'm getting 64,167. 64,167. 64,167. So that is the idea about the right of use. Now remember, this depreciation amount is going to go to the income statement. All right. Then the finance charges here will also go into the income statement. The finance charges for the December will go to the income statement. When it comes to leases, what goes to the income statement is the finance charge and then the depreciation of the leased assets. The payments that the entity makes does not come anywhere in the financial statements. So let's now answer the question. All that we've done is workings. So let's now answer the question. So ACCA Limited, let's now answer the question. So the statement of profit or loss. Profit or loss for the year ended 31st December 2015. Remember, this is an extract. It's not a full financial statement. Bring in our currency sign. Then we bring the depreciation for the period. We did the workings for that, workings 5833. Then the finance charge will come in here. We did the workings also for that. That's workings for 2143. So this is an extract. We can leave it like that, or we can decide to put them in brackets, seeing that they are all expenses in that case, or leave them like that. No cause for alarm there. So that's the income statement. Then let's look at the statement of financial position, which is previously known as the balance sheet. So statement of financial position as at 31st December 2015. Remember, this is also an extract. And we can decide to work with two cash column here. We bring the non-current assets. Under that, we bring the right of used assets. We did the workings for that, workings 564,167. So that is our right of used asset for the period under consideration. Then we bring in the liabilities. The liabilities, we need to split it into the current and then the non-current. So let's bring in the non-current first. So we'll have lease obligation. We did the workings for that. That's workings 4. The non-current liability is this figure here, 48286. 48286. Then we'll bring the current liability, and that's going to also be lease obligation. Still in workings 4, which was the balancing figure, 19857. So we added up, and that was what gave us the total liability for 68143. So that no need for that here. This is also an extract. So this is how we answer this question and present the financial statements that we are required to present. All right. Very simple, sweet, straight to the point. The focus here, most importantly, was to be able to calculate the finance charges in total. Then number 2, to use the sum of period debits to allocate the finance charges. But number 3, most important, splitting the finance charges for the year ended under consideration. And then number 4, determining the current liability and the non-current liability. And remember, payments were being made in arrears. Hence, we have to prepare the accounts or do the amortization schedule for 2 years. For 2 years in that case. So this is answer to this question on IFRS 16 leases, where we have the half yearly payment with payment in arrears and using sum of year debits method to allocate the finance charge by the entity. Any questions for me, please? Any questions for me, please? So that is the idea about that. If there are any questions, put it on the chat for me. If you're on YouTube, put it in the chat. If you're on Facebook, put it in the comment section. And I'm going to be reading all of your comments as well in that case. Now, remember that we started officially with our lectures yesterday with public sector accounting and finance. You still register and join to study directly under my mentorship, getting access to all our lecture videos, our ebooks, our question kit, joining our extra classes, our dawn sessions, and all of the sessions that we'll be hosting, and also joining our executive revision masterclass, which is exclusively to our students, not open to the public. And all of these are 390 Ghana cedis per paper. So you can call or WhatsApp 050-114-9296. You can see the number below your screen. And or visit NhyiraPremium.com. You can see the link in the description to this video and be able to enroll in a course at 390 cedis and study under my mentorship for the ICA November 2021 examination. So that is it, and that is what I have for you today. I wanted to come in and then solve this specific question with you, and God willing, tomorrow we're going to be doing another thing, solving another question, and want you to make sure that you follow through. And you can watch the full videos on the YouTube channel by checking the accounting standards videos in there. And if you are already my student enrolled in our full course on our study portal, you know that you have the assets catalog for all our lecture videos and all of our content already, and you can watch that even before it is done in the main class for that case. So that is it about that, and I'll see you same time tomorrow at 4:30 p.m. as we continue with our discussion. Remember to follow me on Instagram if you are not following me, because the discussion for the day and also the question to be solved will be shared on my Instagram page, and you want to make sure that you follow me on Instagram to be notified in that case. So thank you very much for joining the stream today. It's always a pleasure, and I'll catch you same time tomorrow. Till we meet again, stay safe and stay blessed. Bye-bye.